certainly, I think the M&A, the situation with the M&A culture in the UK and mergers and acquisition with corporates is definitely vital. But there's also a funding gap, isn't there? I mean, if you look at there's a report by Startup Genome that said both New York and London share a problem where there's about 70% less early stage risk capital available to startups who are still testing their product to market fit compared to that of Silicon Valley. So first question to you guys, what do we do about that? And perhaps while you're answering, the audience can be thinking about questions they've got for the panel as well. Who would like to take that?
I'm happy to jump in. One of the things that, LA is a market that's been maturing, kind of behind Silicon Valley over particularly the last half a dozen years. And one of the things that's definitely happening is the way that venture capital starts to look into the market, even from other markets where the capital already exists, is to really find a set of companies that can make progress very quickly. And that usually happens within the dominant industries that are resident, like within London. For example, I think we have 3 investments in our portfolio that are ad tech companies that are based in London. Obviously, London has a huge media business. A lot of the large media holding companies are either based there or have significant presence given the kind of large, media buying markets and the brands and the agencies. And we see that market, companies can accelerate from an idea to significant revenue and even profit in some cases very quickly in those types of markets because their large customers are all kind of resident right there and understand, versus a very speculative kind of tech product, that may not be kind of selling directly into its market there. So those types of companies actually, propel kind of, the startups into larger stage companies, and then they allow, pools of capital that are kind of resident in that market to watch those, successes that that become large companies. And so I think that's kind of what's really happening. And capital is, money flows quickly into where good ideas and value is getting created, right? And so, I think that's kind of the key is really, making sure that a lot of these early companies are based kind of within the resident industries in that market.
Anyone else got any input on that, or do we have some questions? Shoot, Steve.
In terms of the European venture capital market overall, not just in London but around the EU, the EIF has played a fantastic role in supporting the venture capital community, many cases making up for the fact that there are not a lot of institutional limited partners willing to invest in venture capital firms. The ability to attract new investors into the European market is all driven based on sustainable returns consolidated inside of individual venture capital firms. And we're starting to see that now. We see that with DN Capital. We see that with a handful of other very well-known, very well-respected European venture capital shops. So it is occurring right now. Well, let's put this in the broader perspective. The US venture capital market is also going through multiple changes right now. So while we talk about the availability of capital for venture capital in Europe, there's also issues with venture capital availability in the US. And I think we're at sort of day 2 of many days in the US of having difficulties in venture capital. We might be at day 5 in Europe, but the whole industry is going through a period of flux right now.
Okay, we've just been joined by...
There is one more difference as well.
Go ahead.
In that in Europe, in particular around London, it is very normal to raise large sums of capital from family offices. And that is not necessarily the case in the US. I have several clients there that have raised very, very big sums from family offices. The disadvantages of that is it's not institutional money and it does not bring with it the value add of a proper financial sponsor that can help you grow, nor does it bring you the ability to bring in venture debt or growth debt as the company is growing. But nonetheless, that doesn't exist in the US the same way it does in the UK.
So we've been joined by Felder from Bessemer Venture Partners as well. Unfortunately, there's some mix-up on timing earlier. But we had a question in the audience, I think.
So while there are obvious gaps in traditional funding models in the UK, one of the things that we are actually a world leader on is equity-based crowdfunding. We have 2 financially regulated crowdfunding platforms in the UK, which obviously, were changed in the Jobs Act in the US. You guys currently don't. So I guess my question is, should we be putting so much emphasis on traditional funding models and the weaknesses here in London, or should we be looking at new funding models for companies?
since I'm new to the panel, I'm happy to answer that. I'm a partner with Bessemer Venture Partners, which is a $3 billion venture capital fund, and I also teach venture capital and private equity at Harvard Business School. Crowdfunding is such a wonderful idea, and that's about all it is. If you think about what venture capital actually does, it's an intermediary that does a lot of important things that crowdfunding can't do. It selects, it credentials. Crowdfunding can't credential something, and it governs. And so I think despite the fact that we are an investor in several crowdfunding companies, I'm negative that it's ever going to replace venture capital. I think what it's going to do is it's going to be a supplement of some form. In the end, and I may be repeating what some people have already said here, if the capital will follow the companies. When good companies start to appear, the capital will appear. And the capital is starting to appear in Europe because there have been role model companies. There has been Skype, Cambridge Silicon Radio, ClickTech, Element 14. So you're through the tough part. And 2 nights ago, I had dinner with 3 of my partners and 2 entrepreneurs. The 3 partners from Bessemer were from Boston, from New York, and from Israel. We have a $1.6 billion fund that we're currently investing out of. We cannot invest that fund unless we're investing here. So I honestly do not think there's a capital shortage here. I do think there's a shortage of venture talent, but I think that will correct itself over time. I think this is one of the 2 best places to invest in the world right now. But it's not going to be supported by crowdfunding, though I'm willing to sell you a crowdfunding platform.
That's fantastic. LA, we haven't heard from you. Do you have views on the especially the early stage end of investing?
Hi, I'm Donna, and I work at Blinks.com and Burst Media. So my question is, when we work with entrepreneurs, we are a European-based company, and we have a lot of American offices as well. But when we work with entrepreneurs, we try to bring them the experience of working with, advertising agencies and putting an advertising revenue model into their business. And, I have, my question is, why do you think that, the European, businesses and advertising agencies we work with are so much better at working with entrepreneurs versus it's a real challenge sometimes to get some of our, American agencies to be able to work with entrepreneurs so openly. So, my question is how can we bring some of what we see in Europe from those agencies and those media markets here to the US or LA?
Do we have anyone who wants to answer that? It's not really related to funding particularly, but...
Andrew, it all comes down to the individual, because if you take someone like Mark Reed over at WPP, he's actively talking to startups in Silicon Valley and Boston and New York. So, bringing some of that technology over, it's not the technology, it's the person and their own attitude to their willingness to work with young companies.
Okay. Any other questions?
I also think it has to do with the...
Go ahead.
I also think it has to do with the specific entrepreneurs as well. They have to be able to build that bond and build that relationship before they get the best of anyone.
We had another question, I think, in the audience at the back.
Earlier on today, there were some questions and points made about a lack of management talent. Do you think that's the case and part of the reason why venture capital firms are slightly more prudent investing in British firms? Do you think there's a bit of a bubble? I mean, technology talent seems to be here. I think a lot of people have said that, but do you think there's the commercial acumen to build and grow businesses successfully?
Yes. It's not... Yes. If you stop and think about what it takes to really build companies of scale, Europe is filled with really, really great entrepreneurs, except maybe in France, but the French ones are here, so it's okay. It's not that. It's what does it take when you get to the second and third level of a company? When you've got to hire, for example, when suddenly the development, you can get 18 engineers to gather anywhere in the world to build a really great product because they're oriented to do that. But what happens when the product starts to sell, you're starting to broaden out, and you're suddenly moving that engineering team from 18 people to 50 to 100, and suddenly you need 5, 6, 7 project leaders who can manage teams of 10 to 15 engineers, and especially when you need product management. And I don't mean the people when the company was funded, but for the next 5 products. That pool of people is light here, and that's the bad news. The good news is that all companies are global, and the industry is now more willing to finance companies with multiple sites, and that's a gap that'll be filled. But that definitely has been lagging. Why do all these companies get sold rather than move on to being large scale? And when you think about role model companies that you need, when you think of Silicon Valley, going all the way back to Fairchild Camera, Hewlett-Packard, I mean, these are big independent companies. When Boston lost its mojo for a while, it was because they lost the big independent companies who provided those people. When companies stop getting sold here and start getting of scale and producing those people, then that will make the ecosystem really work. It's just a matter of time. It really is. There's one other thing I'd like to say before because I don't know whether I'll get a chance to say it. And just for full disclosure, I was on the board of Silicon Valley Bank for 11 years. But the most important single institution in venture capital is Silicon Valley Bank. It happens not to be a venture capital firm, but it has market share of 50% of all venture-backed companies in the US. That is an extraordinary number. It happens that Europe does not have banks that fill that void. My own personal experience with British banks is they don't have banks that fill any void, but growing companies are not going to be supported by the British banking system. Moreover, growing companies are not going to be supported by the British legal fraternity. The law firms here are very high cost. It's a very hard to deal with. There's a whole bunch of things that are needed in the ecosystem which are coming. So Silicon Valley Bank's here. Some law firms are spinning out smaller groups. We need a couple more venture debt funds. When all those things catch up, then over time we will have the management that we need.
I mean, interestingly on that point, I'll come to your question in a second, but interestingly on that point, if we go back to the Startup Genome report that came out last November, in the ratings, London actually came second only to Silicon Valley in terms of networks and services and support and mentorship and supplier side availability. It was where we came fifth, I think, for funding availability. So although, I mean, my experience certainly mentoring a lot of startups is that there really is a funding gap. There's a huge amount of seed and perhaps crowdsource funding and early stage. But then once you go between 500 to 2.5 million, 3 million, there's a real lack of support. You're nodding your head there, Ali. Would you agree with that from your experience?
Well, I agree with everything that's just been said. I think it is happening and it will take time. But there is a gap, absolutely, particularly at the later stage. And there is funding coming and they will follow the companies. But interestingly, it's US capital. It's US capital spending more and more over here because, frankly, the UK and Europe is cheap compared to the Valley right now. It's an amazing place to invest if I was a VC. And is there talent? There's talent, but there's not experience. And again, that takes time. So I think it is happening. I think we shouldn't just rely on time because I think it will happen over the next 3 to 5 years. I think it is incumbent on us as UK, European startups to be bold, to turn down that $200 million for sale offer. This might come back and bite me on the ass when I get that offer and I take it. But it is incumbent on us to be bold and turn that down, to shoot for the moon, to build big companies, and to reinvest back in the UK ecosystem. And the small bit of investing I've done, it is dramatic the effect you can have on early stage startups when you have seen what happens and how to grow that from 3 to 5 years into very big businesses. It's dramatic the effect you can have on other startups. So it's become on us to be bold, be global, to turn down the big offers and shoot for the moon, and to reinvest dramatically all of our experience and our great people, bring them from the US over to the UK, from the UK over to the US, and that's what we can do.
That's great advice.
And let time take its course.
This is Jennifer over in Los Angeles. Just speaking to the seed gap, I just wanted to ask how the London Technology Fund is faring, and what the reaction has been over there, how it's going, whether you guys have plans to expand it. I'd love to hear a little bit more about that.
Steve, you might have some insight on that. Can you answer that question?
The question was specifically with a London fund or London funds in general?
Or the London Technology Fund, I think it's like a $30 million fund that's been launched via the London government and the mayor to try to provide seed capital for companies directly in London.
Yeah, I mean, I can't comment on the mayor's office, unfortunately, as whether that's being expanded or not.
I can't comment on that specific vehicle, but there is a lot of seed funding happening in the UK at the moment. There are also incubators like Seed Camp who have been very successful at fostering that community. As Felder rightly points out, when the companies get a little bit larger, it's harder to find good managers. I would argue it's not just about independent British companies becoming LSE or NASDAQ based, but it's about creating fantastic teams that can then recycle people into more startups. Felder and I had the pleasure of serving on a company called Indeka together. It was a trade sale. It sold for a significant amount of money to Oracle. Now there are some great startups that are coming out of that former management team, including 1 or 2 levels below the senior management. You saw this with PayPal. You see this with a lot of US-based companies. We're waiting for that ecosystem to develop out of one of the British exits, whether it's Last.fm, maybe it's Skype, but one of the companies over in either the UK or the continent will start fostering multiple startups out of that original team.
So we had a question here in the audience, I think.
Hello.
Hey, we have a question.
Okay,
sorry,
okay, Josh, we'll come to you in a second.
Sure.
Hello. Okay. So you mentioned this is basically for Bloomberg. You mentioned how the UK is very much more risk averse than in the US or in Canada. I'm from Canada, so my question is, how does that change? Is it really much of a time issue? Is it really something where, unfortunately, we have to wait until new generations take over and have the capital? Or is there a way to educate, and is there a way to shift that risk-averse mentality to a more of a, let's invest and let's acquire these businesses for, 20 million pounds, like you mentioned, to that 17-year-old? How do you change that mentality?
That's a great question. Or is there some way that we can do something more radical to incentivize that behavior? Who would like to take that?
I think the answer is role models, and I keep saying the same thing again. This is going to happen in time. Think about how long it actually took for Silicon Valley to be Silicon Valley. It took 50 plus years. It happens much faster now. A better role model might be Austin, Texas, that after Tivoli and Dell took about 10 years. But by the way, I didn't hear the earlier part of the conversation. I reject this idea that somehow Brits are more risk averse. I think it's just whether people are opportunity tuned or not. And when you have enough role models, you do, and there's a lot of activity here. So I think, again, this is just, it's role models. It really is.
And just to add to that, when I was in London for Digital Shortage last year, and I'm going again this year, and for the Olympics, I actually organized a digital event at the Google campus, which is located right in Tech City. And there are a lot of entrepreneurs actually in London, in Tech City, working at both the Tech City campus and the Google campus, creating ideas. It's almost like a cafe culture, just a place with free Wi-Fi, where we have to create these places for entrepreneurs to work and to hang out and to meet each other and to get ideas, get designers, get developers, find lawyer resources, all that. That's happening more and more that I see in the London area. Do you guys agree with that?
Absolutely. I mean, just to comment on your point, Felder, I think actually one of the things we're not so good at doing in Europe is championing ourselves, which doesn't help. It doesn't help valuations. It doesn't help. Everyone I speak to in Europe, all the startup entrepreneurs want to come to London. All of them that I meet, everyone in London seems to want to go to Silicon Valley. And maybe actually that's something we should look to learn, but we shouldn't look to offload ourselves onto Silicon Valley, because what's happened in the cluster here, when I first met Ali in 2008, there was no ecosystem, literally, virtually nothing. And all this has happened in 5 years, which I think is extraordinary. San Francisco, Josh, you had a question.
Reason for that is,
Josh. Yeah, so something that Felder said really struck a nerve with me. I'd kind of like to hear, specific to venture capital and crowd financing, I'd like to hear Julie's perspective a bit more on whether crowd financing is an option that could help London grow, or if Felder may actually be onto something with regards to it having to be a VC-driven interaction.
Well, I think that what's changed, and we haven't talked about this yet, is that the models for early stage funding, a lot of things have interjected themselves at that earliest stage. Whether you look at the way AngelList has democratized access to angel funding, whether you look at Kickstarter or Indiegogo, or even Kiva with low-income entrepreneurs around the world. But the thing that's happened now, because there's so little capital required to de-risk the earliest stages of a hypothesis, is that on as little as 25K, 50K, 100K, you can de-risk quite a bit in the early stage of the hypothesis, because the capital requirements are so low. So then the question is, where are the readiest amounts of money available? So what we see happening actually with things like Kickstarter, they're not equity-based crowdfunding, but what they do is they de-risk that initial hypothesis by giving you a sense of whether there's market demand. It's a way of getting a sense about fulfillment and in the early stages, working out the kinks of product conception and delivery, establishing a community and an audience. So that's kind of the role that I see it potentially playing. The mechanics of whether equity-based crowdfunding ultimately prove out or not, I do think they're fraught with a lot of the issues that were mentioned. But I do think that this is really where a lot of innovation is happening. The thing that's happened here in Silicon Valley in the US around crowdfunding, you have two things happening. A lot of former entrepreneurs like myself do have that insight and the risk tolerance to put capital in at the earliest stages. That's become kind of a more widely prevalent thing as you've had more and more entrepreneurs being birthed in Silicon Valley. And then you had kind of more broadly affinity-based investing, like with the Kickstarters and Indiegogo. So I think we're still in the early stages of that. I think there's a lot to be told in that story.
Yeah, I'm not as negative as Felder is on crowdfunding, but for a different reason. We see probably 30 to 50 business plans a week, and we're a 3-partner firm. And if there's a bias to what we're going to invest in, it's people that we know, it's people that people we know, or it's people that have something that's already proven out there. So if you're an entrepreneur who has a great idea, some passion, some energy, but have no access to people and have to go through 2 or 3 levels before you get a hold of someone, at the early stages, you're going to get very little traction. Once you have revenues, or once you have customer bases or other referential points to notice, then VCs will pay attention. But at that early stage, you're not going to get to the venture capital firms. So crowdfunding can actually play a role either where there's a sector that VCs don't want to be in, such as consumer hardware. There are not a lot of VCs in consumer hardware, or for people who just do not have the access to VCs because they don't have those personal relationships.
And just to underscore that, I don't know of a single company that that has taken its earliest stage of funding from a VC in Silicon Valley in the past 3-4 years. I mean, VCs, the initial stage of funding up to even $1 million or $2 million is typically not funded by classic VCs. You have micro VCs or the super angels in terms of institutional money, but really it's essentially crowd-funded through angel investors, whether that's through AngelList or just the traditional analog means of putting together a cohort of angel investors. So that's kind of an important thing to know. You have VCs creating these kind of seed funds on the side where they're really investing. It's kind of it's an option on a company so that if it does gain momentum, they can follow in with the Series A. But what's happened is you've had a lot of companies funded by small amounts of money with this kind of growing cohort of angel investors and micro VCs. And then what the classic institutional larger venture firms are able to do is kind of stand back and say, where are the breakout winners? Those are the ones that will invest in. So Series A money really is as harder than it's ever been in Silicon Valley because of that, because a lot of things get funded at the angel stage, at the seed stage, but then fail to get the follow-on A round funding as well. And that's something that's not talked about as much.
I like to say, Julie's totally right about something. The problem that everybody's talking about here is in Silicon Valley right now. There's more stuff at the seed level sitting there that's not getting funded than there is follow-on funding to support it. So situation here is just like Silicon Valley.
So
Yeah,
maybe
I mean,
they're becoming more like us.
Andrew, I'll just add this one final thing. The bar is higher than it's ever been before. In my 20 years in Silicon Valley, I've helped start 5 companies, both in consumer internet and enterprise software since 1995. The bar is higher for Series A funding today than it's ever been, because you can make much further progress with less capital. The expectation is that you already have a working model by the time you get Series A. And if you're not a breakout momentum player or in a proven revenue model, it's very difficult to get Series A funding, even though there's a lot of capital here.
Do we have any more questions? There's one in the middle. Can we get a mic? Hey, Sanford.
Hello, Ann. Hello?
I know.
Good
Yeah,
morning.
we can hear you.
Okay. Quick question. When we've talked about the history of Silicon Valley and we're trying to compare it to London, one of the nice things about the history of the Valley is that Stanford University got started and got focused on engineering by President Terman. He spent a lot of time building the public-private relationship. Where is that here in London or in Europe? And where is that investment? Because when we talk about investment, we seem to keep thinking that we'll put the money in as a seed or something along those lines, and then we'll grow, and then the corporations will find a way to fund it. How can we actually do the ecosystem building through government or some other channels to build out this ecosystem, to bring it about the way you just described? Because now we know 100 years ago, there was no concept of a technology business. When Fairchild got started, it was actually going after the vacuum tubes. HP, they got Disney. Disney started them off. So how are we doing that here, whether it be academia, by government, whatever?
First of all, that's a really good insight, what you said about Stanford. I teach a course on the history of venture capital, and it wasn't Terman, actually went all the way back to the beginning of Stanford. There is a culture that is in the Valley that goes back to 1891, and even the ham radio clubs in the 50s, that is this sort of mix of, it's a flat society, mix of academia and commercial. But what's going to happen here isn't going to be an exact repeat of Silicon Valley, right? We're 21st century now, and all this stuff gets speeded up. There needs to be connections between academia and the tech sector that they need to be stronger, and the schools have to do that. Schools have to do that, and the funding model for the universities here is fundamentally different. Now it's changing, so welcome to the world of student loans, but that's going to help as that model changes, because the universities are going to start reaching out and make those connections stronger. The thing that government can do the best is to unload the entrepreneur. Tax breaks don't help, believe me. Guys like me, we'll take care of ourselves. It's the it's not going to be about tax breaks. It's going to be about unloading early stage companies from good regulation, but just recognizing at a certain stage you've got to free these companies up. So I think all these things are in place, honestly. I think that we really need to hurry up the academic connection here. I think if there's one place that organizations like this can focus on, it's reaching out to the engineering schools and starting to make those connections.
So just to add on to
Birmingham's a fabulous network engineering school. University of Birmingham's a fabulous school for networking engineering. It really is.
Just, Andrew, just to add on to a little bit of what Felder was saying, I don't know if you can hear us.
We can hear you.
So Steve Blank talks a lot about how the military funding that went to Stanford, and effectively went to Stanford as opposed to MIT, because MIT felt that they were too academic to want to take money specifically to do military research. That helped fund a lot of what happened in the Valley. And a lot of this happened in the UK as well, in the the RF research that was done. A lot of the telecom infrastructure, the technology was developed in the UK. Now, today's wars that are being fought are a lot more based on intelligence and being able to analyze that intelligence than back in the World War II days. So when people were in the past funding RF technologies, today there's funding going on for cloud-based technologies. And you see a lot of that at Southampton University. You see that at Cambridge University. So there is funding that's taking place. Can the UK government do more? Of course. Can the VCs do more about reaching out to the professors and the graduate students and trying to find businesses that spin out? Absolutely. But I think just to answer Sanford's question, there are things being done. It just doesn't get on the radar screen of the press that much.
Right, so have we got any more questions? We've got a few minutes left. I mean, going back to the funding issue, I mean, Boris said that, you know, we're on the doorstep of the financial center of the world. It does seem strange that I mean, is it really that the companies aren't good enough for that funding, for that Series A? Is that what we're saying? Or is it, you know, why are there so many VCs who can't raise in Europe, you know, their next fund because the asset class has done so badly historically? You know, are we really saying there's nothing we can do to accelerate the process? We just have to wait. You know, there's no specific.
There's plenty going on there. There's plenty going on there that actually merits not only Series A but growth capital as well. And one of the biggest things that's happened recently is that up until a few years ago, most of the growth funds in the U.S. required the companies in the UK or elsewhere to relocate to either Los Angeles or Silicon Valley in order for to get their growth rounds. But recently, you see some of the best funds, including the Excels and the Indexes, setting up shop in Europe. And now they're investing in European companies in Europe. But even with that, I'm currently working with companies out of Spain, Italy, England, because they're trying to raise their capital in the US because they want access to US institutional money. And on the Series A, there's plenty of capital available. The question is the teams are not experienced enough. So we feel that there is going to be more and more of that ecosystem being built. And I completely agree with the presence of Silicon Valley Bank that has been there for 2 years is extremely important. I mean, they cannot, the demand far exceeds the supply for that bank right now. And I think that is going to help a lot of them excel as well.
So, Andrew, I can give something very tactical about what can do, but it does talk a little bit of technology terms here, because the entrepreneurial community, as Felder points out, it will come. It's there at the early stage, the management teams will develop. If you want to talk specifically on venture capital, a lot of the venture capital over the last 10 years has been funded effectively by governments, whether it's EIF, whether it's UKIF, or otherwise. And there are some VCs that have great returns. And like the rest of the world, the LP community is being very selective about what goes on in venture capital. Europe is one of the leading sources of secondary funds, people who buy out other people's funds. And there's a concept of stapling, which is to say, I will buy out your older fund and put money into your new fund alongside of that to get the right, to get that better return. If some of the government institutes that have funded VCs that are successful in Europe then say, we'll give up some of our upside if it's stapled with a new investor from around the world from the private sector, as opposed to the public sector, putting in money into that VC's next fund, that could help kickstart more new investors coming into the European LP community, which will build out the GP community.
Would you agree with that,
might work. I like I like the idea. Government-backed funds and moving around in the long run, every study in the world that's been done on them, with the exception of a short period of time in Israel, the government intervention directly in the fund market has retarded the venture market. And it's just silly. I think what Steve's suggestion is actually a good one because it gets you out of that. And but look what happened when they spun out Actis here. It was in the front pages of the paper. So government people aren't going to take that step. I mean, it's just the way it works. I don't know whether there's anything to speed up specifically European funds. Right now, the state of raising money in venture capital is as follows. There's somewhere between 12 and 15 funds in the world who can raise money at will at any time. There's another 20 or 30 funds that can raise money pretty much when they need it, but the timing has to be somewhat right. Then there's somewhere on the order of magnitude of 400 funds that are right now in trouble. That it's very, very hard to raise money. It's scratching, clawing, and it's because there's been a 10-year drought in the venture business in general as far as the limited partner community is concerned. Secondly, the venture capital industry is too small for the limited partner community right now. If you are sitting on top of you know, 50 billion in assets, it doesn't help you to stick 50 million into a venture capital fund, whereas you can get these private equity guys to take all the checks in the world all the time. So that's been a problem. In particular, venture capital in particular it's the most persistent asset class that exists, which says previous, you know, when you look on mutual funds, it says previous results don't guarantee future results. Turns out the one place that's not true is in venture capital. Many studies have been done, but if you're in the top tercile, if your fund was in the top tercile, then there is a 49% chance that your next fund will be in the top tercile. If your fund N was in the bottom tercile, there's a 61% chance it'll be in the bottom tercile the next time. So because of that, there's a natural tendency of the rich get richer in this business. And on top of that, there's been this drought and the limited part, there's a scale problem. I don't know how that's going to work out, but that particularly affects Europe. And right now, there's only 2 funds that can raise money at will in Europe. That's Index and Excel Europe. There are a lot of other really, really good, pretty good funds here. It's a genuine problem. I wish there was a way to speed it up because the whole industry needs it.
Right. So I want to wrap up. What I like is just if there's one key message that we can send to obviously Boris and the mayor's office, but also to do ourselves. What is the one key thing that we can do to accelerate further the London tech scene, which I think is burgeoning and it's certainly the leader in Europe. But what's the takeaway message from each of you? Ali, do you want to kick off?
I'll repeat what I said before, which is use the 47% of UK GDP to buy British.
It's a great, clear message. San Francisco?
So, what I said before, the case studies for the acquirers, for the FTSE 100s, show them why Google, Facebook, et cetera, make money by paying disproportionate sums for startup entrepreneurs and get the British companies themselves to acquire British.
Julie, have you got anything to add to that?
Yeah, I would underscore that. I like the term role models because I think there's almost even a PR problem. You've got actually the successes that are there could be further amplified and highlighted. There's a direct relationship between risk tolerance and perception of opportunity. And to the extent that the perception of opportunity is there, the risk tolerance is going to get higher, and that'll address a lot of issues, both for entrepreneurs and on the investing side.
Let's find a word from LA.
This is Kevin from Los Angeles. Yeah, we just look forward to more increased communication like this. I think this Google Hangout is great just to open up the lines of communication between London and San Francisco just to really talk about these issues. So I hope to see more of this and more cross-city events in person too. Ivan?
I think within the next few years, we're going to see a significant increase in exits and success stories out of London, and that's going to be the beginning of a phenomenal few years ahead there.
That's great. Thank you.
I mean, I think there's a tremendous opportunity for investing and growth in London, and we're really excited as a firm and just as part of the LA tech community to participate in that.
Yeah,
Mark?
Mike.
Yeah, my comment would be, look, I really think it's about the entrepreneur. I mean, I think all of the ideas that we talked about today are fantastic and will certainly help. But, I think it's about entrepreneurs working with entrepreneurs, in the city of London and, kind of the greater continent of Europe, and encouraging them, to leave school and to start companies and to not, go to bigger, companies if they have a great idea. And it's that kind of grassroots kind of enthusiasm and support that really kind of drives the great ideas. And ultimately, that's what gets capital to flow into the ideas, even if it's coming initially from other regions, where they have pockets of capital that are more prevalent. As I mentioned before, we've been funding probably 10% of the companies out of our latest fund have been coming from London. So, I think it's about great ideas and seeing companies kind of executing in the early stages. That's I think the best thing that entrepreneurs can do, and not have to rely on the government or any of these other ideas, which are all great, but take much longer to kind of come to fruition.
I agree with that, and three great companies growing here in London with more than 5,000 employees, staying independent, and the problems are over.
Yeah.
Well, I really, really do want to thank very sincerely everyone's contribution. It's hard enough doing a panel anyway. It's even harder doing it across multiple time zones and the ups and downs of Google Hangout, but we seem to have got through it. Thank you very, very much. Can we have a really big round of applause for everyone? Felder, thank you very much for stepping in. I think to summarize, London is a fantastic place to start a company. It's the best place in Europe to start a company, and definitely for some companies the best place in the world. So I think that's how we should end. Thank you very much.
Thank you.